Bitcoin has traded on a 4-year cycle since it started. I never thought it should trade on a 4-year cycle, but everyone in China does. And so sometimes these things become self-fulfilling. And if you look at the 4-year cycle, we've got a few more months of down, and it might go as low as, 45,000. That would be, if you graphed it over the old 4-year cycles, it would still be above the high. And then it would, take back off again on the next, big bull run. Listen, we're still significantly higher than we were in 2022 when we were buying it at 15,000. We're 4x that. Gold's not 4x.
Bitcoin is attempting to find its footing after one of the sharpest sell-offs of this cycle. After falling aggressively on the back of ETF outflows, weaker institutional demand, and renewed uncertainty surrounding inflation and Federal Reserve policy, Bitcoin has managed to recover toward the $63,000 level. But despite that bounce, sentiment across the market remains fragile. Trading volumes have fallen, altcoins continue to struggle, and many investors are beginning to ask a question that seemed impossible just months ago. Has the crypto bull market already peaked? That is exactly why comments from Galaxy Digital CEO Mike Novogratz deserve attention. Unlike many market participants who are either permanently bullish or permanently bearish, Novogratz is attempting to evaluate the market through the lens of history, psychology, and capital flows. His central argument is not necessarily that Bitcoin's long-term story is broken. Instead, he believes the market may be experiencing something much more frustrating for investors, a prolonged period where the narrative that fueled the previous rally has simply run out of momentum. And that distinction matters. Bitcoin's rise into the Trump election victory, combined with ETF enthusiasm and expectations for lower interest rates, created an extraordinarily powerful wave of buying pressure. But markets don't move in straight lines forever. When narratives lose strength, prices can enter periods of consolidation that feel far worse emotionally than they actually are fundamentally. According to Novogratz, that may be exactly where we are today. In this interview, Novogratz breaks down why Bitcoin has lost its market sponsorship, why artificial intelligence has captured most of Wall Street's attention, what declining volumes across crypto could signal for the months ahead, and why the controversial 4-year cycle theory continues to influence investor behavior despite the growing maturity of the asset class. He also discusses key support levels, market psychology, and what investors should be watching if Bitcoin continues to struggle. If you enjoy thoughtful crypto analysis without the hype, make sure to like the video, subscribe to the channel, and let us know in the comments whether you believe this cycle is different or whether history is about to repeat itself once again.
Listen, Bitcoin had its run into Trump. It put in its high. There was an unbelievable surge of buying, and all markets hit a top, and then they start consolidating. And it's just lost its sponsorship and narrative. And, the Fed isn't cutting rates. We still don't have the market structure bill, though I think there's a pretty good chance we get it, but we don't have it yet. And so the one thing that AI has done is it's taken all the energy and all the attention. So I'll give you another story. I bought a ton of, and I've told you on this, Chinese internet companies, Chinese tech stocks. So I got Alibaba. That's my big one. And I'm like, okay, it's cheap. It's got the cloud. It's got AI. This is going to be my big winner this year. The NASDAQ since January has outperformed Alibaba 42%. 42%. It's a tech stock and a tech stock, right? Chinese stocks stake, right?
Yeah.
Anything that's not memory, part of this AI food chain, no one cares about.
Yep.
And then crypto is in that, we've tried to make the crypto agentic link. It's actually a real link. It's not a theoretical link, but no one cares about crypto right now. And so it just doesn't have the energy. Markets need energy. And then you got sailors selling a little bit. I don't know why he did that. It was a strange move, but it was a tiny amount. But if the guy with the laser eyes is selling Bitcoin, that's not good either.
Michael, we got a lot of young viewers. What is RSI? What does RSI mean? Okay, this is the relative strength. I'm referring to the relative strength index.
Yeah, listen, if you want to think about it, it's the momentum of a market, how powerful that market is. And so when you have these wild bulls, it gets way up it can't sustain that forever. And the selling in crypto right now, the RSI to the negative side, it's almost as pessimistic as you've seen, right? I mean, this has been the worst 5 days. Monday, Tuesday, Wednesday, Thursday, Friday. It's like punch, 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 punch. Not even a bounce, not even a little respite. And you're just like, ouch, ouch. I mean, my jaw hurts.
So, Michael, the RSI on Bitcoin right now, the relative strength index is at a record. I mean, it's below us back in the time machine, January of 2023. So is that a good indicator that we're very oversold? Or do you think there's is there a thesis break in Bitcoin where you're wrong about Bitcoin, I'm wrong about Bitcoin, and Bitcoin, and Peter Schiff is right about Bitcoin? It's heading for 20,000.
Now, listen, I mean, if you're looking for copium, like, okay, well, let me come up with some story that still makes me feel okay. Bitcoin has traded on a 4-year cycle since it started. I never thought it should trade on a 4-year cycle, but everyone in China does. And so sometimes these things become self-fulfilling. And if you look at the 4-year cycle, we've got a few more months of down, and it might go as low as, 45,000. That would be, if you grafted over the old 4-year cycles, it would still be above the high. And then it would, take back off again on the next, big bull run. And so there's a lot of people in the Bitcoin community that play that algorithm and believe that. The 4-year cycle never made sense to me as we became a mature asset, but it makes sense to a lot of people. And so that's the one, if I'm looking for a bull argument, I would make. We're still significantly higher than we were, in 2022 when we were buying it at 15,000. We're 4x that. Gold's not 4x, right? And so a lot of this is, when you bought it and I got a friend who's long at 8,000 and he's shooting himself that he didn't sell it at 107. A lot of people don't want to sell because of tax, and they thought this is going to go to 1 million. And he still believes it's going to go to 300, 400,000, right? He's like, I wish I sold some, but I'm not going to sell it. And so a lot of this is horizon you have. But listen, it doesn't trade well right now. Volumes are down 30 to 40% across crypto. And more importantly, other cryptos trade worse, right? Look at Cardano, which still has an $8 billion market cap. The founder, Charles Hoskinson, yesterday said, I'm taking a break. I'm done. Like the guy that built the thing. And so those aren't good signs.
Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit? You could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth? Tax-free. You keep the full $50,000. Same crypto. Completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing. Every time. Novogratz's comments highlight a reality that many investors are finding difficult to accept. Markets are not driven solely by fundamentals. They are driven by attention. Throughout much of the last year, Bitcoin benefited from a series of powerful narratives: spot ETF approvals, institutional adoption, political support, and expectations of easier monetary policy. Those stories attracted capital, generated excitement, and helped push prices significantly higher. But as Novogratz points out, attention has shifted. Artificial intelligence has become the dominant investment theme, drawing both capital and media coverage away from crypto. That does not necessarily invalidate the long-term Bitcoin thesis, but it does create a more challenging environment where fewer new buyers are entering the market. Combined with declining trading volumes and weaker performance across the broader altcoin sector, it helps explain why sentiment has deteriorated so rapidly, despite Bitcoin still trading far above the lows of the previous bear market. At the same time, Novogratz continues to emphasize that perspective matters. Bitcoin may not be behaving like a strong bull market asset today, but it is still dramatically higher than where it traded during the depths of the 2022 crypto winter. The real debate now is whether this weakness represents the beginning of a larger structural decline or simply another painful phase within a longer-term cycle. That question leads directly into the next part of the discussion, where market psychology, investor behavior, and the infamous four-year cycle theory take center stage.
What do you think, Anthony? Are you holding your Bitcoin?
I'm a newbie to this. You and Brigger brought me and Brett Messing into this goddamn thing. Okay, I'm a long-term believer, but I see it as a 4-year cycle. I was with Richard from Binance at the consensus stuff in February. CZ was talking about a Bitcoin super cycle. Richard Tang was telling me, no way, this is a 4-year cycle. To your point about guys in China, it's a self-fulfilling prophecy. They look at the thing and say, I got to start selling. Okay, and so if the 4-year cycle theory holds, Bitcoin doesn't recover until the early part of the fourth quarter of 2026, possibly into the first quarter of 2027. What I love about this right now as a market participant, though, is that everybody hates it. Okay, I mean, you don't hate it because you're too smart to hate it, but you have no energy for it. Okay, I don't have any energy for it. I mean, let's just be honest,
Yeah.
But I think, and again, I could be wrong, I'm looking at this RSI. Usually when it gets to this level, you're getting near a bottom. So we're at 62 as you and I are speaking. Does it head to 50? Does it head into the 50s before it gets back to 70? I'll just point out when the ETF started, we were around the low 40s in January of 2024. So where do you think we're going?
I don't have a strong conviction if we take out 60, we're going to head to the mid 50s to low 50s, and then it'll be a 50, 75. I think 80. I said this before, and I'm mad at myself for not selling enough when we got up to 82. When we were at 60 last time, I said 80. You got to have to take out 80, 82, 83. That's going to be the top, unless it takes that out and then it goes to 100. Well, it failed up there, and now I think that still is 80 is still your ceiling.
That's the resistance, yeah.
If you take out 60, it opens up 50, 45 to 50. If you're a good Catholic, you're saying 2 Hail Marys and an Our Father, that 60 holds.
And my son says to me, Dad, about a year and a half ago, 2 years ago, when Bitcoin was 60, you were so happy. And Bitcoin is 60 again, Dad. Why are you not happy, Michael? So be my shrink and tell me about market psychology and brain psychology, where I was...
Recency bias. And once you've made money... bias,
that's what it is.
But we've also, once you've made money, it's yours to keep. And then you had a new decision and you lost your money and you feel dumb. You feel smart when you make money. You feel less smart, maybe not dumb, but you feel less smart when you lose money. And you're like, but all those people were saying I should have sold it and I didn't. And the chart told me I was supposed to sell it and I didn't. And so I'm either holding it for the 300 like my friend, and this is just noise, or I feel less smart than I used to. And what makes investing so hard is it constantly makes you feel less smart. And you've got to learn how to just, forgive yourself. And I had told people the greatest lesson an investor must learn is gentleness, like how to forgive yourself for all the idiot mistakes we make. Otherwise, you just beat yourself up all the time, and it really is miserable.
One of the most important takeaways from this conversation is that investing is often less about predicting markets and more about managing emotions. Throughout the interview, Novogratz repeatedly returns to the idea that investors struggle not because markets are impossible to understand, but because human psychology makes it difficult to stay rational during periods of uncertainty. When prices are rising, confidence feels effortless. When markets pull back, even long-term convictions can suddenly feel fragile. That psychological battle becomes even more difficult when investors focus exclusively on recent price action. As Novogratz points out, Bitcoin trading at $60,000 feels very different depending on whether someone bought at $15,000, $30,000, or $100,000. The asset itself has not changed, but the emotional experience of each investor is completely different. This is why market cycles often create such extreme optimism near tops and such extreme pessimism near bottoms. The underlying fundamentals may evolve slowly, but sentiment can change almost overnight. For crypto investors, the key lesson may be to separate short-term volatility from long-term conviction. Novogratz is not dismissing the possibility that Bitcoin could revisit lower levels, including the mid-$50,000 range, or even lower if key support breaks. At the same time, he is also reminding investors that corrections are a normal part of every major market cycle. Whether the 4-year cycle ultimately proves correct or not, history shows that periods of maximum pessimism often emerge when confidence is at its lowest and uncertainty is at its highest. As always, none of this guarantees what happens next. Bitcoin could stabilize and begin rebuilding momentum, or the market could face additional downside before a more durable recovery emerges. What matters is understanding the forces driving price action, rather than reacting emotionally to every headline and every red candle. That's ultimately the difference between surviving a cycle and being forced out by it. If you found this analysis valuable, please support the channel by hitting the like button, subscribing, and turning on notifications so you never miss future market updates. Thank you for watching, and we'll see you in the next video.